Hey everybody, this is John and welcome to the free video. And for today, so we had a good session this morning in the room and this afternoon. Not a lot going on in the overall markets. There's a lot to cover in the premium video, which I'll go through. But one of the things that we did look at was BABA. And we were just kind of looking at this in terms of, okay, the stock keeps going higher. You know, obviously at some point it'll be done and it'll take a break. We're just not there yet. What I was looking at here is that we have this gap fill, you know, from where it closed here. Just looking for it to come up and kind of at least kiss that gap and potentially, if it can get through it, get up to that 1272 extension. Okay, so that's kind of the trade there. And when we're looking at this, it's like, okay, so there's not even enough history here to get a squeeze. There's nothing on the 78-minute chart. So in something like that, you kind of drill down here and look at these 5-minute charts. You can see we got a nice little kind of a pop here into the close, but then with the day traders who kind of dumped it as well. But at this point, you know, again, in terms of the pattern, just kind of popping up here, kind of kicking back here, a little bit of rounded pattern. It looks good for at least a pop up. If we get some early strength tomorrow, I would certainly be selling half the position and trailing up my stop. Looking at a few other positions here, I like Costco still. As you can see on the daily chart, Costco's had a fantastic run and is slammed into some resistance here. So the question is, okay, well, what kind of trade setup would I like to look at here? And on something like this, what I like to look for is wait for the momentum to shift, i.e. look for that yellow momentum showing that there's a shift, and that just kind of signifies that it's ready to push higher. Now, in something like this, because I'm not looking for the same power as we saw here on the daily chart, on something like this, I would want to go out at least 10 days and do a debit spread. Okay, that's kind of the classic area where you're essentially reducing your overall average price for the option, giving yourself a better opportunity to profit from the position. Okay, and generally on something like that, what you want to do is with the debit spread is to take into account, you know, the expected move. All right. On the downside, the oil industry continues to be under pressure. And this is another one I like. Again, kind of a 10-day out trade where we're looking at buying an at the money to slightly in the money put, but then also selling an expected move put against it, creating about a 10-day, anywhere from about 10 days to 15-day debit spread that we can hold on to through the expectation, through the price expectancy of this trade. And then last but not least, this is one that came up on the 195-minute bullish continuation on the stock scanner. So if you go to here, and you can see here the 195-minute bullish continuation went through, and wanted to just kind of pick up and see kind of what was going on. And one of the ones that popped up here, they actually all look interesting, but GMCR has earnings, but Verizon is right here, as you can see. And this one I like. In fact, we'll put this on the 195-minute chart since that's the squeeze that came up. So we've got this really good looking squeeze that's setting up. We've got the continue. You can see that the daily chart here, obviously very strong. This squeeze, at a minimum, I'd look for it to push to the top of the channel. So let's call it about $52. Now, is that a huge move from here? Nope, it's not a huge move from here. But the nice thing about Verizon is the implied volatility is only 13%. So you can actually buy further out calls for almost no premium and capture most of this move with very little theta decay, which is obviously very positive. And that's something that could be done with a straight out call or, of course, legging into a debit spread. Okay, a couple of quick updates. First of all, just so you guys know, happy spouse, happy life. In my case, since I'm a man, happy wife, happy life. We just got back from 18-year anniversary in Nicaragua, which was a lot of fun, and now I'm back. And then also a quick shout out to all the veterans. I have a great-grandfather, Grandpa Good, as we call him, who is a World War I vet. My grandfather, Frank Williams, was a World War II vet. He was left in Italy for dead for a week. They came back, found him. It took him a year to recover, but he survived. And then my father, Bill Carter, he was in Vietnam. That was me in all those photos. But it was, yeah, I'm a history major. I mean, I think that's great. So respect to all the veterans out there. So quick, a couple of things here for you. So today in the room, I did an extended session this morning. We talked about BABA. We did a debit spread on it. And so I had a lot of questions on debit spread. What is it? Okay, so there's two main types of debit spreads that I use, vertical and diagonal. So with the vertical, it's essentially like we did today. So we bought the 114 call, sold the 122 call, same expiration, okay? That's a vertical, right? Now, for a diagonal debit spread, you are essentially buying the further dated out option, and then you're selling a closer, So here in this case, we're selling the option that expires in a couple of days, but we're buying one for the next week. Okay, so we're selling the 121. If it expires worthless, cool. We hold on to this one through the weekend. All right, that's a diagonal debit spread. And so what trading comes down to really is what consistency. And the question came up is, what is the most consistent way to trade? And yeah, credit spreads are great. They're consistent, but what happens is you're risking 10 to make 1, 10 months out of 12, you make money, and then there's that blow up time. If you don't know how to defend it, you lose all your profits, right? So credit spreads can be annoying. Whereas debit spreads never have that problem. Yeah, sometimes they're gonna lose money, but there's never a blow up. So I'm doing a class this Saturday, okay? And we're going to be talking about debit spreads, how to nail the stock price, the strike price. Do you close them out? Do you let them expire? How and when to manage them? Choosing deltas for each leg, the role of implied volatility in debit spreads, and including vertical and diagonal, debit spreads versus just going along the option. When are there times when you actually just buy the option versus doing a debit spread? What to do when the sold one goes in the money? When to use in the money, at the money, out of the money, and why? Effects of volatility on the debit spread. When to take them off? Do you hold at expiration or close at 80%? Deep in the money versus at the money. Advantages of each. How do you and when do you adjust if the underlying falls below the strike price? How to do a debit spread and diagonal in TOS and in a trade station. Is it okay to close them early? Debit spreads on elephant versus non-elephant trades. Will I walk away with a step-by-step plan to make money with debit spreads? Yes. How to defend if needed. And by the way, one of the ways you can defend if needed is you just turn it into a butterfly, which we'll talk about. When do you roll spreads into the next month? How do you time them with the squeeze? Do you leg into them or do you go all in at once? How do you structure a diagonal for a big momentum trade? How to trade both directions if you aren't sure on the direction? What if the IV is high versus low? How do you scan to find the best ones? Is it suitable to do them on cheaper options? What to do on a diagonal if the short option goes in the money? How far out of the money do you go? When to close out the short option and let the long option ride? What about debit spreads and earnings? Big boy stocks like Tesla, the higher volatility stock versus normal stocks, like let's call it Microsoft or Procter & Gamble. Standard deviation in debit spreads, what you need to know. Debit spreads and pinning, which are awesome with pinning. Plus, you can do ratio spreads, okay, which are awesome, and I'll cover those. What do you do if there's an assignment? There's really not most of the time, but what do you do? Debit spreads on indexes like the SPX. When to sell the negative and let the positive run. How to use these with the Simpler Stock Scanner, how to use debit spreads to defend your credit spreads. Which, by the way, is super powerful because one of the easiest ways to defend a credit spread is with debit spread. So I'll talk about that. And then what happens if you have questions, after the webinar. Okay, so the link for this class, simpleroptions.com/debit. Let's take a look. All right, so if you go to simpleroptions.com/debit, you'll come to the link for this Saturday's class, okay? simpleroptions.com/debit. This is going to be this Saturday, November 15th from 2 to 6 East Coast time, which of course is 1 to 5 Central. And if you can't attend, that's fine. I know there's some college football games going on, but if you can't attend, it will be recorded. You typically will get this recording within 24 hours, meaning that you can view it before Monday's open, which would be critical. You're going to learn everything you need to know about how to create a consistent income stream with using debit spreads. Now, it was interesting in the room today. I asked everybody, it's like, hey, would you be more interested in occasional big winning trades, meaning that there would be losers in between them, or the most consistent way to trade? And the 100% answer was consistency. This is how you get consistency. How to use debit spreads to increase your probability of profit. You're going to be using less risk because selling the further out of the money option helps pay for the more expensive options. Now, selling credit spreads is fine, but what happens is most of the time we're risking 10 to make 1, right? And guess what? 9 times out of 10 it works fine, but that 9th time out of 10, or that 10th time out of 10, when it blows up, if you don't completely know how to defend it, you're screwed, or if it gaps against you, you're screwed. Okay, so that's tough. That does not happen in debit spreads if you set it up correctly. Why debit spreads are perfect for a small account? Because they need zero margin. By the way, you can do these in a cash account. You don't need a margin account. So you never lose more than the amount of the debit. How to write a plan for growing an account using debit spreads so you're guaranteed to not lose more than your stop loss. Okay, you're never going to exit the play early by being shaken out. And if we continue to scroll down here, and by the way, we elected to do this as a lower price class. I get that a lot of times this is something that someone with a smaller account might want to do. So instead of doing like a $9.97 class, this is just $2.97. My goal with this, okay, and we'll talk about this, the rules for using debit spreads to defend positions. And by the way, we're going to be talking about verticals and diagonals in terms of debit spreads, okay? Because they're both extremely powerful. But my goal with this is that you walk away from this on Monday with a solid plan on how to create consistent winnings from the market. And I encourage you, if you're going to take this class, to close out any positions that are giving you grief. Clear your slate and be ready to go. And I'm also going to give you how to find these trades, scanners for these trades, and a trading plan for Monday plus specific trades for Monday. I'm super excited about this class. This really takes the best of both worlds. I love the idea of like buying calls for some huge elephant play, okay? And I love the idea of selling credit spreads to capture that income. But there's pros and cons of both, okay? If the elephant play doesn't work out, right? It's not that great. If the put credit spread blows up, it's like, oh, that hurts. That doesn't happen with debit spreads. With debit spreads, there's never that, oh my gosh, I can't believe this happened to me. It's consistency. Okay. And the more you understand about how this works, the more you can incorporate it into your trading plan, or honestly, throw out your old trading plan altogether and just start using this. Again, simpleoptions.com/debit. It's going to be a Saturday class. I'm completely looking forward to it. And that's what we got. So looking forward to seeing you on Saturday. Have a good night. See you at the next update.